So the mission for this deep dive really is to make sense of the global landscape as we're closing out 2025 and heading straight into 2026.
Right.
We've been looking at all these macro headlines, trying to cut through the noise on, geopolitics, economic pressures, and some really surprising corporate moves.
And it's a very complex picture. I mean, it's really defined by this collision of conflict on one side and, well, attempted negotiation on the other.
Yeah.
We really have to start on the geopolitical front. I think the tension there is just directly spilling over into everything else, especially the market.
Okay, let's do it. Let's start in Eastern Europe. We know there's this high-stakes diplomacy going on, these meetings between Trump and Zelensky.
Yes.
But if you had to boil it down, the main takeaway seems to be that Trump himself noted that the really difficult territorial issues are still just completely unresolved.
Exactly. That's the core blocker. But what's really fascinating, I think, is the sheer scale of the requests being made. Zelensky apparently asked for up to 50 years of security guarantees from the U.S. 50 years. I mean, think about that. This isn't about getting through the next year. It's a huge, multi-generational ask.
Wow. That just shows a complete lack of faith that any short-term deal would actually hold, doesn't it?
It's immense. And you have to see it in the context of the military pressure. Russia deliberately stepped up its drone and missile attacks right before that Sunday meeting.
Sending a very clear signal.
A very clear signal. Putin's been explicit. If peace doesn't happen on their terms, they'll just continue to use force.
And all that pressure, it seems to have worked, to a degree. It's forced a really critical shift in Kyiv's diplomatic posture.
A huge shift.
We're now hearing that Zelensky is actually open to a referendum, and this is the key. He is no longer ruling out territorial concessions.
But that is a tectonic shift. I mean, that completely changes the definition of what victory might look like. It's moving from demanding a total restoration of old borders to recognizing some really painful trade-offs might be on the table.
And that signal alone is going to recalibrate Russia's entire strategy.
Yep.
Okay, so let's shift eastward. China had a very immediate, very military response to what it sees as foreign interference.
They did. They launched these huge military drills all around Taiwan. They even explicitly called it a stern warning.
And it's not just military action, right? They're backing it up with legal changes.
That's right. They're revising their foreign trade law. And the new language is all about protecting national sovereignty, security, and development interests.
So they're basically building a legal framework to justify future actions against foreign companies they decide are hostile.
Precisely. And this kind of serious escalating rhetoric isn't just in Europe or Asia. We're seeing it in the Middle East, too.
Right. With the ongoing tensions in Gaza, Israeli PM Netanyahu is planning to meet with Trump.
And at the same time, the language coming out of Iran is just severe. The Iranian president Pezeshkian flat out said his country is in a full-scale war with the West.
That's not posturing. That's definitive language.
It is, and it just raises the global temperature dramatically. All of these geopolitical facts, they have real-world consequences when we turn to the global economy.
Yeah, these tensions, they drive protectionism, and that just strangles trade. Let's look at some of the hard numbers, the actual signs of a contraction.
Yeah, okay.
Well, even here in the U.S., there was that huge winter storm that just snarled holiday travel, thousands of flights canceled. That definitely hits local spending.
It does. But the more structural weakness, I think, is showing up in the big global manufacturing hubs.
You mean China?
Exactly. In China, industrial profits fell for the second straight month in November. That's a concrete sign of weakening local demand. The world's factory floor is slowing down.
And Europe looks pretty wobbly, too, mostly because of Germany, its economic engine.
Very wobbly. A majority of German business groups are now saying they expect job cuts in 2026.
And they're blaming an export slump and rising protectionism. So that's a direct link back to all those geopolitical tensions we just talked about.
It is, and it really highlights how much the rest of Europe depends on Germany's stability. One survey basically said the entire European outlook hinges on whether German spending holds up.
If Germany sneezes, everyone else gets a serious cold.
That's the one. And for you, if you're planning for your business, it's worth noting what's happening in the UK. The Lloyd's barometer saw a little recovery, but the CBI data...
Still really downbeat, yeah. Overall business sentiment is just fragile.
And that fragile confidence, it translates into real pain for companies. In the U.S., corporate bankruptcies are now tracking at their highest pace since 2011.
2011, wow, that is a stark comparison. That's over a decade.
It shows a level of stress we haven't seen in a long time. And companies are all citing the same things: inflation, high interest rates, and just total uncertainty on trade policy.
And looking ahead, the labor market doesn't look great either. Forecasters see almost no hiring growth in 2026.
Right, because firms are making a fundamental pivot. They're planning to rely more on technology, automation, AI, to handle more work instead of hiring more people.
It's a defense mechanism against all this uncertainty.
It is. But before we move on from the U.S., there were two quick, kind of unexpected notes from Washington.
Okay.
First, a really surprising tax forecast. Besant is predicting that tax filers are going to see gigantic refunds because of the OBBB.
Right, and for you listening, that can sound like just alphabet soup. OBBA is the Omnibus Budget Bill.
And the reason for these huge refunds is tied to a retroactive adjustment for R&D deductions.
So basically, millions of companies, and maybe some people, could get a big, unexpected check. A little short-term boost for spending, maybe?
Maybe. Meanwhile, on the political front, Trump's central message for the midterms is expected to be all about lower prices.
Which just shows that the establishment thinks inflation is still the #1 pain point for the public.
And one last thing on the regulatory side, major accounting firms think U.S. regulators are actually going to reduce the number of audits they inspect.
That's surprising. You'd think they'd want more oversight when corporate stress is this high, not less.
It's an interesting move. And all these headwinds, the high rates, the threat of contraction, it all leads us directly to the policymakers.
The central banks.
Yep, the ones pulling the levers on the cost of money worldwide.
And we are seeing some clear shifts in direction here, starting with the U.S. Fed. Investors seem to be bracing for a more divided, less independent Fed in the future.
Yeah, the political pressure is really mounting. Now, across the Pacific, the Bank of Japan, the BOJ, is sending some strong signals that it might have to act.
What are they saying?
Their summary of opinions notes that the real interest rate remains low.
And just to clarify, the real interest rate is what you earn after you account for inflation.
Exactly. So if that number is low, it suggests inflation is running hotter than their nominal rates, which, mathematically points to them needing to hike rates further.
Okay, that makes sense. But then you look at the People's Bank of China, the PBOC, and it's a bit of a conflicting signal, isn't it?
How so?
Well, the PBOC just fixed the renminbi at a 15-month high. Wait a minute. If China's industrial profits are falling and exports are struggling, why on earth would they let their currency get stronger? Wouldn't that hurt exports even more?
That's a fantastic question. It really shows the balancing act they're trying to pull off.
Right.
A weaker currency helps exports, yes, but a stronger currency signals stability, and, crucially, it helps fight imported inflation, the rising cost of things they buy from overseas.
Ah, okay. So they're prioritizing stability over a temporary export boost.
It seems so. It signals they can tolerate a gradual appreciation. It's fascinating.
It is. Now let's get into the corporate world, because this is where companies are actively reacting to all that economic pressure.
And the big theme, the one overarching everything, is the race to make AI cheaper and faster.
Like that NVIDIA and Grok deal, they signed a non-exclusive licensing pact.
Which is all about accelerating what they call LLM inference speeds while cutting costs at the same time.
Yeah, let's break that down for everyone. LLM is the tech behind things like ChatGPT. Inference is just the process of it generating an answer for you.
Right.
So accelerating inference means you get your AI results way, way faster, and the cost to do it drops. That makes it a no-brainer for all those companies trying to cut costs.
And the market is going wild for the companies building the infrastructure for all of this. DigitalBridge stock, it jumped up to 50% pre-market.
50%.
Just on reports that SoftBank was in talks to acquire them, it shows the insane demand for data centers and all the hardware that powers AI.
It all ties into this massive AI data center build-out trend. You see it in places like Northern Virginia, which has become a huge case study for both the promises and the real-world challenges of this stuff.
And on a completely different front, you can see how those global tensions are turning into actual cash payouts.
You're talking about the defense sector.
Yeah, Europe's biggest defense firms are planning to return $5 billion to shareholders, all because of the massive surge in global military spending.
So geopolitical risk is paying direct dividends in that sector.
It certainly is, and regulatory risk is still very present. The Department of Justice is investigating several big companies, Google and Verizon included, under the False Claims Act.
Which usually relates to government contracts and funding. So that scrutiny isn't going away.
Not at all. And if we look at specific sectors, there are big challenges. In Asia, India is seeking over $30